What do you think is the biggest challenge people face today with their money?
So having said that, the biggest challenge, nobody counts for what we call inflation these days. Inflation is something that you're never going to be able to stop. I believe taking risk has to be part of our life. There's so much more risk when you actually don't take action to things. I will say probably 99% of the things that you will think in the back of your head that can go wrong never happen.
Debt and investing. If you're in debt, should you be investing?
Yes. And that's why most people can never get out of debt. What I notice with most clients is that they don't plan to fail. They fail to plan.
If you could go back into time, what would you tell your younger self about money?
Wow, that's a deep question. I will say to myself that.
Hey everyone, welcome back to the MindsetJournaling podcast. Here we deep dive into the unique minds of our incredible guests to help you uncover insights, experiences that will help you think better, learn, and understand on your growth journey. Today we're joined by Mr. Jonathan. Mr. Jonathan here is a financial coach. So introduce yourself. Who is Jonathan?
Well, Vince, thanks for having me here on the podcast. Actually very excited to be here. I'll introduce myself. My name is Jonathan. I'm a financial coach, been in the financial space for over close to 20 years. And I've been helping out people with their finances, helping them out with the insurance side of it, investments, creating wealth for the individuals and businesses as well, along with obviously, helping them out in the journey of retirement as well, right? So anything in regards to retirement, anything with health and dental benefits, all of that. So all the financial space overall. Originally from Mexico. So I immigrated to the country about 20 years ago. And just like any other immigrant in Canada, right? So we had the challenge to make it happen here. We came for what it is, the land of opportunity. And then, wanted to make a big impact with my family, win for myself, and obviously win for my family. At the same time, I was faced with the challenge of any other immigrant. That is where do I start, right? How do I make it? And that's where, I came across on the financial side, the financial aspect of it, to know exactly how important it was going to be to learn how money works and what it takes to be basically financially independent as well. So at that point, I realized the importance of money and then how important it was to be able to provide for my family. And then not only that, but at the same time, I had the opportunity to help others in that sense with their finances. So I'll tell you a little bit about more into my journey and how it started on that. But it goes way back about 20 years, so a couple decades ago. And I'm happy to call this country my home now.
Amazing. Well, I'm glad you're here. Glad I met you.
I believe that, usually God put people in your path to be able to, to grow as an individual.
So Jonathan, financial coach.
Correct.
We're going to talk about money today. 100%.
Love it.
It's ironic how we live in one of the wealthiest countries in the world today, but yet we always seem to have money problems. I read a stat where it said most Canadians or most people in North America live paycheck to paycheck. About 30% of Canadians cannot fund a unexpected cost of around $500 without going to debt. And that number rises from 30% with additional 28 if it's $2,000 or more.
Right.
I want to ask the first question. What do you think is the biggest challenge people face today with their money?
Well, I think obviously the biggest challenge that I've seen, especially sitting down with clients, is the fact that number one, they don't make enough money. And believe it or not, even like you mentioned, even making $500 to $1,000, even maybe a couple $1,000 can actually make a difference in your family. So number one, we're not making enough money. Number two, I find that nobody counts for what we call inflation these days. And inflation it's something that it takes away the ability for your money or for yourself to purchase something. So like we talked about, like, in Canada, that, where inflation is like 3%, usually they count 4 or 5%. Lately, I believe it was like, closer to the 8 to 10%. Those are numbers that are not really, disclosed very high with you. I think COVID was one of the biggest things that actually accelerated that.
Yeah.
And the amount of money that it got printed in the market. So having said that, the biggest challenge, one, not making enough money. Number two, not counting for the inflation or the cost of living. And the third one I would say is also not having a financial plan. So just like anything else, right? Like, the way I look at it is like, if you wanted to get fit, if you wanted to get, like in great shape, what will be the first step that you will take towards that? And whenever I look at something, it's like not having a plan. It's one of the biggest challenges that Canadians have. And then the last one will be not having a financial coach or somebody to help them out to achieve that goal. So taking it back to working out, right? I know you love working out. So
that's where we met, actually.
Exactly.
We met at the gym.
Yeah. So not only having that goal specifically to what they want to achieve, but also not having a personal trainer. In this case, a financial personal trainer. So somebody that walks them through the process and then helps them out to get there.
Inflation. Is inflation good or bad?
That's a great question. So some people will tell you it's good. Some people will tell you it's bad. Essentially, inflation is something that you're never going to be able to stop, right? So the cost of living, it's always going higher. And that's whenever you talk to, I'm not sure if you ever talk to somebody that is older, and then they will tell you, oh, I used to pay, this amount for
30 cents for a meal.
Exactly.
Back 30 years ago or something.
Exactly. So now what happens, right? So essentially, like, there's no meals on there like $15 anymore, right? So like, even if you go to McDonald's these days, right? When you look at that's something that is never going to stop. And the more printing of the money, or the more money out there that, the government is printing, or the financial institutions, in this case, the banks, the Bank of Canada, that will give you a higher amount or depreciation of your money. So that means that it's going to cost a lot more. So one beautiful way to look at it is to always count for inflation. And you can start from something like around the 3%. Usually, like, any financial coach will tell you, so like count for 3%. And then basically, at least you can actually take a look at what's going to happen in the future, and knowing that your purchasing, or the power of your money, or the purchasing power, is going to be obviously diminished. So if you count for that, there's ways of counter. And basically, one perfect way to do it is through investing, right? So if you have, for example, inflation at 3%, and you're investing your money, and then you're actually getting a rate of return of 8, 9, 10%, so you're actually winning in that sense. So if you actually plan, most people will be gaining out of that, or actually will be on top of the game, because they know that the inflation is going to be, they're going to be making with their investments more than what the current inflation is.
We'll touch on investing a little bit later on. I want to go back. We're talking about inflation is the depreciation of your money in value.
Yes.
Right? So what does that really mean? Because if I have $100 and I go to, let's say, the grocery store, and I buy 5 things that cost me $100. Next year, for example, I go back with that same $100 and I can only buy 4 things.
Correct.
Does that mean things are getting more expensive, or does that mean my $100 bill is worth less?
You have to know that things like transportation, for example, or oil and gas is going higher, right? So like, like basically the cost of the goods and products for somebody to provide those services is going higher. So they have to increase their prices. And then obviously they're not going to take the loss. So they're going to pass that along to the consumer, number one. Number two is also because there's more money in circulation out there, that means that the value of your money got depreciated, just like, like supply and demand, right?
Yes.
So there's a lot more supply of money. And then basically what you're going to be looking at is that those $100, if you have a 3%, depreciation or basically inflation. So that means that next year, those $100, they're only going to be worth $97.
$97, yes.
So you got two things at once happening for you, right? So one is the cost of all of those goods and services are higher, but at the same time you have the issue that is happening that it's like there's a lot more circulation on that.
So inflation.
It's a double whammy.
It's the two things, double whammy. Your dollar is worth less.
Yes.
And things are just always continually going higher.
That's right.
Interesting. Okay. Here's the thing. The reason why I want to talk to you about money is because I feel like there's so many people nowadays who don't understand terms, for example, like inflation or investing. They might hear it on the media and the news, but they don't necessarily know what it means. I want to ask you, Jonathan, since you worked with so many families, so many people as being a financial coach, in my realization, or my opinion, I find that a lot of people are not unwilling to learn, but they dismiss or overlook their personal finances, especially those, I would say, who are not in the best financial situation.
Correct.
Why do you think that is?
It's a great question you're asking, right? So like it's funny, but it's not even funny how you can look at something like that and you will say people with like in the worst situation should be taking care of it quickly.
Be more
be
conscious
proactive,
of it. Yeah,
be more conscious.
There
Correct.
you go. That's the right word.
Exactly. And what I find is that a lot of people are like, procrastination is one of the biggest things. I'll do it tomorrow. I'll postpone it for next year. I'll ignore that portion of my finances. And it comes with a little bit of like shame and at the same time, a little bit of guilt. Yeah. Guilt for not taking care of it. So they got into the same cycle because it's like, I'll procrastinate. I'll look at it later. And at the same time, they look at it and then they really kind of see or know a little bit of that they're not in a good position. And at the same time, they feel guilty about it and they don't want to deal with it.
So they just put it in their back end, but then that compiles and compounds.
Exactly. So that's why a lot of the times, like you hear people, for example, saying like, oh, I went bankrupt.
Okay.
Or I did a consumer's proposal. And that's not something that just happened like out of the blue, right? Like you just don't go bankrupt one day and then say like, like things didn't work for me. It's an accumulation of consistently bad habits or bad decisions on the money and your finances that essentially leads to that. So whenever you hear somebody going on bankruptcy, it wasn't just one bad decision. It was a consecutive amount of decisions that lead to that process.
For those who are always dismissing or overlooking their finances, you talked about procrastination. You talked about that shame or guilt. What do you think they are thinking about in terms of money? Because I know, for example, some people who are not in the best financial situations, right? And
right.
I super interested, love to talk about money, investing and everything.
Right.
So whenever I want to talk to certain people about their finances, they always shrug it off or they always put it to the side or they're kind of hiding from their problems.
Yes.
Do you think it's because just of shame and guilt, or do you think it's because eventually they don't want to face the reality that they have to solve it?
Right. So I believe both are equally right of what you're saying. I also think that a lot of the times is we never talk about money at home. You ever notice how like, a lot of families is, like let's not talk about money, or let's not talk about like, business or entrepreneurship, or it's kind of like taboo to be sitting down and talking about money specifically.
Yeah.
So it comes also from your past experience.
Why do you think that though? Why do you think it's such a taboo thing? Because personally, I would love to talk about money to anybody any day.
100%.
But why do you think it's so taboo that people don't want to even speak about their finances?
I believe it's been passed through generations.
Generations?
It's been passed through generations. It's been passed through, bad experiences. A past experience could be somebody like, a father, for example, having a bad experience in a business, and then just passing along that experience to their son and saying like, hey, business is risky. Like investing is risky. And then it just passed through generations to the point that it's also the system itself. It's always trying to get you into that mindset on following one specific line, right? So that's what I call the matrix usually, that it traps you into that system of just thinking specifically, like maybe I just should be an employee, right? Maybe I should just, like be okay with like having a couple weeks, off or vacations on a yearly basis. Maybe I need to be secure, right? So like everything, we're always looking for comfort in a way,
Yes.
or be comfortable. And what I find is that a lot of the times, like you will find most of the better things out there are through getting uncomfortable and then taking chances. So I usually say, like, if I were to ask you, do you think it's riskier not to invest or to invest? What would be riskier?
What would be riskier? Not investing.
Why?
Because, correct me if I'm wrong, inflation will never go away. It just keeps compounding year and year and year.
Right.
So, in my opinion, if I hold on to my $100 and I don't invest it, which we'll talk about investing and what it is right after.
Correct.
But if we don't invest our money, we are guaranteed that our $100 bill is worth less the next year, the next day.
100%.
If we invest it, it's nothing in life is guaranteed.
Correct.
But we have that potential to make more and earn more and beat inflation. Or we also have the potential to earn less or be worse than inflation, right? But I also think it's a risk tolerance thing.
Yes. So it is a risk tolerance, and it's also, tolerance is something that you build up to.
Yes.
Right. So like you can always start investing in some way that it's safer, if you want to call it, like a little bit less risky. So we'll talk about portfolios. We'll talk about like basically like ways of minimizing risk, but at the same time, I believe taking risk has to be part of our life, right? So another question I usually ask is like, do you think it's riskier to take a chance to exercise or not to exercise?
To exercise.
Right. Much better, right? Like there's so much more risk when you actually don't take action to things. So not taking action, to me, not investing, it's not taking action.
And there's risk to not taking action as well.
On anything.
Yes.
On anything, right? And I will say probably 99% of the things that you will think in the back of your head that can go wrong never happen.
Oh, 100%. 100%. Let's talk investing. Investing. What is investing? Because there's so much people out there who know what is investing, but they don't know the definition of truly what it is to invest. Where, what, the definition. What is investing?
So investing could be in any different way, right? So like if you're speaking specifically on stocks, mutual funds, what they call mutual funds, or portfolios in this case, it will be investing in shares of companies. So say we talk about Apple, right? And most people have an iPhone, right? So if you go and buy an iPhone, basically bringing the shares up of Apple. So why not go in and invest on shares of the company and own a little piece of that company? So you can invest as a mutual fund. You can also do investments. Some people do it on real estate. Buy a house, rent it, do anything, or a condo or anything like that. And then obviously that's an investment, right? Mm-hmm. You can also invest into a business.
Yes.
Right? Mm-hmm. So that will be the 3 types of investing, basically.
Got you. I want to make it more simpler. Your example of Apple, you buying Apple and then an Apple iPhone versus you buying an Apple share or a stock.
Right.
Both of those options put money into Apple's pockets.
Correct.
One of them, you get a product. Mm-hmm. One of them, you don't get a physical product.
Right.
Why would people want to invest into an Apple share if, quote unquote, they're not getting anything in return?
So you're not looking at it, you're looking at it as a physical.
How should we look at investing? You're
looking at it as like, I want the reward right now. We're in the physical world, right? Like, and basically that's what real estate was so good about it, because people saw the house. It's tangible. I can touch it. I can feel it. Mm-hmm. When you invest into a company or a share of a company, it's actually in paper only. It's actually on a computer. It's a number until it's cashed, until it's taken out. Yeah. So the best way to go about investment or investing is to buy and hold. We always call it buy and hold. Mm-hmm. So there's a reason why you hold it for a longer period of time, because there's also something that it's called the rule of 72.
Okay, explain that.
So the rule of 72 is basically something that is literally how fast or how often your money can double. So it's a simple mathematical equation. Say you have $100,000, mm-hmm. and you put them at a 1% interest rate. I'm sorry, but most banks actually pay you 1% or less. So it's uncomfortable to say it, but most people actually invest with the banks.
Yes, because that's
safe.
That's all they know. Mm-hmm. Continue.
Correct. Yeah. So if you were to actually divide 72 into 1, that gives me 72 years.
Wow, a whole lifetime, basically, almost.
Yes. So if you were to invest at a bank right now at a 1% interest rate, that means, or you're making 1% on your money every year, that means that it's going to take, for those $100,000 to double, you're going to have to wait 72 years. So a whole lifetime.
Take that thought. Can this be applied to inflation rates, credit card rates? Mm-hmm. So if we reverse it, most of the rates right now for credit cards are what, 20, 25? Can the rule of 72 be applied to debt?
Yes. And that's why most people can never get out of debt. So I have sat with clients before in the past. We'll talk about debt stacking too as well. But basically I did the math and I looked at it, and it was going to take him over 150 years to get out of debt. Why? It's crazy, right? So, but why do you think that? Is because the rule of 72, the banks, the financial institutions know this. They lend you the money at a 20, 28%, 20%. And that's why people can never get out of debt, right? Because you're spinning on the same wheel. It's a snowball effect, right? So that can be applied to credit cards and lending. But that can be applied on the positive side, knowing this, that you can actually make a good rate of return on your money through investing and through diversified portfolios.
Got you. Investing. When should people start investing?
The best time to start investing it was yesterday.
Yes.
The second best time is today.
So the majority, if not everyone nowadays has debt.
Correct. We live in a debt society.
In a debt society, right? Either it's credit cards, either it's a mortgage, car loans. Most of us have some sort of debt.
Right.
Right? In a way, how I like to view it is sometimes debt can control your life. I'll give you an example of that. What made me really understand this or realize that debt is a very scary thing. The reason why I like to say if you're in debt, sometimes debt can control you, is that it can affect the way you think. So let's get an example. So 2 people working at a restaurant. One works because they have to get out of debt. One works just, for example, to work, to gain experience, to get money, but they're not in debt. They get sick. Now here's the mindset shift. If you're sick now and you don't want to go into work, the person who is not in debt can technically, quote unquote, doesn't need to work because they don't want to or they can't. The person in debt, quote unquote, has to because they feel like they need to earn money to pay this off. And that's why I say sometimes debt controls your life or dictates your actions, because if you are in debt, you think about things differently. You behave differently because you know behind your back that something is chaining you to the actions you're taking. Right?
You're forced to work.
You're forced to work in a sense. And then we can talk about the matrix, the system, et cetera, on how it doesn't want you to exceed.
100%.
But I really think that debt becomes a way of life. Let me ask another question now. Debt and investing. If you're in debt, should you be investing?
100%.
Explain.
Well, there's calculated risk, right? So to begin with, like I will probably say, or not probably say, I'm going to say the best way to go about it is to earn more money. Maybe earn another $500 to $1,000 extra. Start with debt stacking, which is the best way to get out of debt as quick as possible. And at the same time, start creating or investing and start creating good habits towards that. So the habits are very important too as well. When we talk about investing, usually like like for somebody that is in debt already, you probably don't want to start like they're not going to be able to do like say $2,000, $3,000 a month, $5,000 a month, for example, towards investing. But they can start with $100, right? Creating those good habits.
Yes.
And at the same time, taking care of the debt stacking side of it.
You talked about debt stacking.
Yes.
What is your step-by-step framework? For example, if you were in debt, to get out of debt. What is debt stacking? Like, how does it work?
So I'll give you an example. Say you have three accounts.
Okay.
Or 3 credit cards.
3 debts.
3 debts. Correct.
3 debts.
Yes. So credit card A has $1,000 balance. Credit card B has $5,000. And car loan has
20,000?
20,000.
The most?
Right. So the easiest way for you to, if you're making minimum payments on all of them, so you always want to be able to do a little bit more payments towards any of them. However, the one that you're going to take care of it first is credit card A.
The smallest
because the
one.
Smallest, correct.
Why the smallest one first and not the biggest?
Good question. Because the smaller one is going to be paid off faster. So it's how fast you can actually be able to pay it off. So if you add, let's just say $100 or $200 towards the smaller side of it, it's going to take you maybe 5 months to get rid of that one. So then now out of the sudden, you were used to paying extra $100 or $200 a month. You get rid of that one, then you have the second one. Now you're going to tackle the second one.
once you tackle the first one, the $500 credit card A, are you saying that you still take credit card A minimum payments and put it towards the second one?
Yes.
Okay.
So now you don't have that one, but you were used to put in extra $200.
So you keep what you're used to, even though you paid it up.
Correct.
Okay.
Correct.
And then you just build it up from there.
Yes. And then it becomes a snowball effect.
Okay. Debt stacking. How does that help with the mindset in terms of battling debt?
Well, it creates, number one, good habits, right? So
That's a big one. Yes. Yes.
100%. So it's just like a good habit of putting money aside for you, right? Or saving money. In this case, investing money is the best way to go about it. But it creates good habits for a person. So we are our habits.
Yes.
We are the result of the habits that we choose. So if we have those habits for the next, say, 6 months to a year, that builds up confidence. And your confidence will go up because you are also taking action towards it. You know, and the mindset set of things, all of it leads from action. And taking care of it.
Gotcha.
And having a plan, obviously.
Of course. Having a plan is a big thing. Like you said, if you don't have a plan of the direction of where you're going, you won't know where you're going. Right?
What I notice with most clients or most people is that they don't plan to fail. They fail to plan. If you don't take care of that, of a plan, you're going to fail. That's just the way life is, right? You know, I don't know where I'm going. I don't know where I'm shooting.
Yes. Yes.
There's no goal.
Now let me ask you this scenario-based question. Mentality about money is different when you're older and younger, right?
Right.
When you're older, you want to be more secure because you have families and everything. Conservative.
Yes.
When you're younger, you don't have that much responsibility, so you might want to, let's say, go out more, spend more.
Yes.
Question. We can always generate more money, but we can never generate more time. Talk to me about the mindset of spending money now to live in the present moment versus investing or saving for your future. I'll give an example, a personal example. Back when I learned about money and finance and investing, back during COVID time, I was so in awe or so fascinated that your money can work for you.
Right.
Right? And that was a big thing for me because if my money can work for me, eventually I'm going to get to the point where I don't have to go into work, or I can have the ability to choose not to work because I know money is still being generated even without me doing anything.
Right.
Once I've learned about investing and about money, my initial phase or my initial plan was to just save, invest. I'm going to be set for my retirement when I'm 40, when I'm 60. A lot of people don't have that mindset, but I also think that mindset at a young age is very extreme.
Not too many young people do it, right? Or are thinking about that.
But in my case scenario, I was thinking, if I sacrifice now my time, my enjoyment for the future, in the future I'll be set.
Right. But you want to enjoy life too.
But I wanted to enjoy life too. And after, let's say, a year of just saving, investing, being very money conscious, I realized that I wasn't as happy with myself because I wasn't doing the things I wanted to do. Going out and having fun with using my money.
100%. Enjoying your life day to day.
Day to day, right? Do you think there's a balance between enjoying your life now and spending money in the present moment, and as well as investing and saving for your future?
Yes, of course. So 80-20 rule, maybe?
80-20 rule?
You can apply that to. I'll give you an example.
What is the 80-20 rule?
20% of the money that you generate in the shape or form or however you generate it belongs to you. Not for housing, not for the car, not for the clothes, not for the day-to-day enjoyment, but for your future.
Okay.
And your future self will thank you for taking care of it today. Let's just say the average Canadian makes $50,000 a year.
Yeah.
And that person puts aside 20% of their income, which is $1,000, to invest. Not to save the money into the bank, but to actually invest and generate, a rate of return. That person, for example, for the next 30, 40 years, they will be set with $1,000 a month.
So you're saying, for example, when you get your paycheck, 20% you save or is set aside for your future.
Correct.
80% is for
your necessities, your day-to-day.
Your day-to-day?
You can also divide and to say that 20% can be applied to 10%. You can put it into a short-term account, and then 10% can be into a long-term account.
Okay.
I'll give you a case scenario. Say I have a newborn, and I start investing for him $200 per month. He's 1 year old, for example. At 18 years, that money, if you were to have a rate of return of 9%, that child will have, at 18 years old, over $100,000.
And this is 200 every single month for 18 years.
For 18 years.
Okay.
But say that at 18 years old, I hand out the full amount and I say, promise me that you're going to continue putting $200 per month for the next 60 years. That account from 18 years all the way to 60, that person can retire or at least, have easily over $6-7 million. 60 years of investing, putting your money aside, investing and buy and hold, what I was telling you about.
Yes.
And then have an amazing life after 60. Now, keep in mind, $200 of today, we talked about inflation, right?
It's not going to be $200 of the next 60 years.
No. So you think about, for example, in 20 years, what's going to be $200?
In 20 years? Probably like 100, half.
There you go. So how easy it is for somebody to create that good habit, pass along generational wealth to that person, and then say, hey, son, daughter, I've been putting aside some money for you. Here you go, 18 years old. Don't worry about student loans. Don't worry about anything else. Just literally, here it is. Promise me you're going to continue doing this. I'll hand it out to you. How beautiful that is to set your kids or your children for a better future.
Yes. So as a kid, we would, since I'm Chinese, we would always get red envelopes, right?
Yeah.
So every time we would get red envelopes during Chinese New Year, my mom would take it. And as a kid, I was like, why are you taking my money? So then sometimes I would hide it. But once I realized, when I turned 18 or during COVID time when I started learning about finance and money investing, I realized that she was taking that money and she was investing it for me during that time that I couldn't. Right? And I guess that kind of built that discipline and habit as well of always being consistent. Rich people and poor people, different mindsets, different viewpoints, different values.
Yes.
You've worked with many people of different ages. I'm assuming as well as different, wealth gaps as well?
Yes.
Right? What is the most common limiting belief about money that you see different in the wealthier clients that you have versus the less wealthier clients that you have?
I think it goes back to the mentality of how they view money, how it was passed through generations too as well. We were talking about those people talk about money. in the table
The
while
taboo
they're,
talk, yes.
like, do they talk about it into the family? That is passed through generations through. I believe also the way they look at money as well. There are some people that, you ever heard of the term, for example, money doesn't grow on trees?
Yes, all the time.
Right? So
all the time.
that's a limiting belief, right? Because technically, like, if you really look at it, money is energy.
Go further.
There's a frequency to it. What you think of will expand as well. So a person always thinking and being on the positive side will always do well, because it's a positive thinking, it's a positive vibration.
Okay.
At the same time, you got to take action. Because you're thinking, your thoughts will become your habits and your actions. And your actions will give you the results that you're looking for. So it goes back to, again, what we talked about, right? If you think about it all the time, you're going to find a way to have a side hustle that brings you 500 to 1,000 a month. I'm not talking about like huge amounts. It's going to get you out of debt, just like what we talked about. And at the same time, it's going to create that good habit for you to be putting aside or paying yourself first all the time, that 20%.
Yes.
Because it compounds, right?
Yes, yes. Rich mindset versus poor mindset.
Yes.
Would you say poor mindset is more negative or more
Yes.
downwards looking?
Vibration,
Vibrations?
attitude.
A richer mindset is more positive.
Yes.
Opportunity seeking, you would say. Right?
Yes.
So you think that's what separates the wealthy and the not so wealthy is all mindset?
Yes. Number one, it's going to be your mindset, right? So what you focus on, it will expand. And if you're thinking about it, and if you're positive about it, there's no way you're going to have a negative outcome or result.
But you also have to put in the work.
Yes, you got to have actions, right? So you got to take action, right? So essentially, it will lead you to take action, because if that's all you're thinking about it,
you're going to find a way.
Of course, life will, like, the law of attraction of the universe will lead you to that, right?
Yes.
If you want to get something done, you give it to a busy person. So it's easier to get something done with somebody that's really busy and that it's really, grinding it, than a person that it's not busy. And there's a reason why they're not busy.
What's the reason?
What do you think?
I don't know the answer.
There's no action. The person that it's creating action, or it's leading to taking action to it,
yes,
will always have a better outcome than the person that is not busy and not taking action. And that goes back to investing. You must take action. You must take action towards making more money. You must take action towards, creating good habits.
Yeah. Well said. Well said, Jonathan. Here's a good question. What's more important in wealth creation? The ability to generate more money, or the knowledge and skill to effectively handle and leverage money?
They're both equal. Because even if you don't know how to generate more money, you can study it and take action. And it goes the same way on the other way around. You must take action, and then you will become knowledgeable about it. So they go in together, those two. You will never see somebody that is just thinking about it and getting results without taking action.
Yes.
And the opposite will happen the same way. If you have somebody taking action, essentially it will lead to good results, or they will become competent on it. So you must have both in order to be successful with it.
You must have both.
Yes.
Okay. Financial freedom. Many dream of, many wish for, many are working towards, but many are left hopeless towards it.
Mm-hmm.
What is financial freedom and how can we achieve it?
Financial freedom is the ability for you not to be able to work anymore and still have money coming in.
Explain further.
If something we talked about maybe a person being sick. So if that person cannot go to work or generate money, it's going to be very difficult. So in order to have financial freedom, you will have to accumulate enough not to be able to work. Mm-hmm. So at that point, you will counter or take a look at the inflation side of it too as well. So having that plan, sitting down with a financial coach, investing your money, compounding it too as well. Mm-hmm. And then basically having that freedom of time, which is the biggest commodity we have, and location. Say they shut down again. Say there's restrictions in Canada or the West or the Western countries. Mm-hmm. But then it's free somewhere else. If you have financial freedom, you can go there and be free.
So what you're saying is financial freedom is different for everyone, right?
Yes.
But financial freedom also, you have to take into account the type of lifestyle and where the cost of living is.
Yes.
Is that what you're saying?
Yes. Mm-hmm. And it's basically the ability of not working and having your money work for you.
Yes.
So it's an accumulation of wealth. Mm-hmm. And that accumulation of wealth is not only like, a lot of people think, well, accumulation of wealth is just to have financial freedom. Well, it's not. Because you think about this. You want to accumulate enough money because you don't know when you're going to need that money to save a loved one, to maybe having something out of the blue happening. And I believe this happens once in a lifetime to anybody, which you will need the resources, financial resources, to save your life. You don't know when that is going to be, but you might be able to help others. You might be able to help your family member if they have an issue with their health. Mm-hmm. So the accumulation is not only for financial freedom, but it's also in the event of something in a lifetime will happen to all of us that we will need that money.
So that we don't have to go into debt in order to...
Yes. And that's what you see in the US a lot, right?
Yes.
Let's just throw it out there, right? Like, like somebody with cancer, right? Uh-huh. Which we've seen like an increase of that, right? Like the last couple of years. So save your life, right? Well, maybe you have to take care of that, right? Like, maybe you have to go outside of the system to fund it for somebody to cure themselves. And that's where it comes as well, having insurance. Mm-hmm. Having insurance is important, right? Because you never know when you're going to need that. But that will give you a peace of mind, right? Yes. That will give you like that protection, that extra layer that you might need. Mm-hmm. So not only the accumulation of wealth, but also having insurance to it, that you don't have to go in deep into those savings or borrow money or do this or, do extreme measurements to do that, mm-hmm. because you created enough wealth, mm-hmm. and because you have insurance as well.
Makes sense. Got you. It's been a pleasure, Jonathan. I love to talk about money. I could talk about money all day. Final 2 questions for you.
Yes.
What experience or moment in your life that made you want to start digging deep and learning about investments, money, what it is?
Well, I always had an interest towards it. I had the opportunity when I first came into the country to work for an exceptional company, Franklin Templeton. So it's an investment company. I was able to see, like I was in the imaging department at the time, and I was able to see the traits that were going in. So when I say that, like the first interest that I had is like, what does that switch means? What does a pack means? Like, how is these people, like I will see checks and, how is these people like really funding that much, right? And it was intriguing to see like not only what people were investing and how they were doing, but also like it was intriguing to see how some of the accounts were actually growing. And the third one, besides helping others, the amount of money that it was involved and how rewarding it was financially for dealers. After Franklin Templeton, I got into the, like to get with my own brokerage.
The industry.
And then, like I got my license, I got all of the requirements that were needed. And at the same time, I started to see how rewarding it was to help out others. And you might not see it right now, right? Like, I mean, like for anybody that starts putting money aside, start small, right? But once you see that, like, I can go back into accounts for over the years. And then like I remember putting in like, like a few $1,000s, for example, and seeing it like not in double digits or like, like basically over hundreds of thousands years later. And then you see like when people call you and they say like they thank you, right? Like, hey, listen, because of you pushing me to put this money aside, now I can actually help out my son.
You change lives.
Correct. My son is able to go to school. Maybe it could be something like, hey, we're going to have the first doctor in the family. Maybe it is, hey, thank you. I'm able to, like not work anymore, retire.
Yes.
So those are the things that, we have the ability to touch or to touch those lives, like you mentioned, like changing lives. And you don't see it until years later, right? So that's basically, like when I look in retrospective of how it started, and at the time it was like it started like, oh, I just want to make $500, right? I just want to make $1,000 extra side hustle, and I'll be okay. And then you're starting to look of the ability to change lives with people, like change family. Or change generational wealth for them. We talk about insurance, right? But like, maybe, hey, listen, you'll be able to help somebody. Unfortunately, things happen. Somebody passed away. You deliver that check for them. You're changing a life, right? Because that person not only lost their loved ones, but also lost that income that person was bringing into the family.
That's amazing. That's beautiful, actually. Final question. If you can go back into time, what would you tell your younger self about money?
Wow, that's a deep question. I will say to myself that money is energy. That it's important for not only to have a great life, but also to help others. That it's important to win, to make it for yourself and your family, and more for your family than anybody else, because that way it'll give you peace of mind that they'll be okay. I will say, obviously, like I will start investing right away, as of yesterday, like I mentioned. That will be the advice that I will give, and obviously start making money as soon as possible.
100%.
Start bringing in an extra income.
100%. That's amazing. Any final thoughts, comments you want to say before I wrap it up?
Well, it's been a pleasure being here.
I love the convo.
Listen, thanks for inviting me. Thanks for having me as a guest today. Well, I'm just going to leave it up there and basically Hope it's okay with you, but
Yeah, go for it. You can talk.
we talk about making more money, right? We talk about like, you know, bringing in an extra income and how necessary it is these days to bring an extra income. Growing my agency, I'm helping out other individuals as well to create more money, make more money on a part-time basis, not needed to be coming full-time or anything like that. And then obviously, like, not only helping out your family, but start winning for yourself. I'm looking for great people. I'm looking for people that want to make it big. I'm also looking for people that it might mean, like, you know, bringing in maybe a couple $1,000s a month, helping yourself and your family, and I'm open to having that conversation as well.
Where can people find you?
Well, they can find me on my direct line, cell phone. They can find me, like, you know, obviously on Instagram, Facebook.
Yeah, and I'll link everything down below in the descriptions and everything.
Awesome.
Well, Jonathan, it's been a pleasure.
Amazing. Thank you.
Thank you for those who have tuned in and stayed to the very end. We appreciate you, and we hope that you learned something new today. If you haven't already, be sure to like, comment, and subscribe for more episodes like these. And until then, my friends, take care.